Are you ready for a bombshell that's about to reshape your silver strategy? Ever heard of changing predictions overnight? Well, Andy Schectman, the visionary CEO of Miles Franklin, has done just that for the silver price forecast. And you need to hear this. Schectman, a renowned expert in the industry, has just now made a shocking prediction about the future of silver prices. His message is clear. Since 2019, it's been a strategic move to position yourself with silver eagles. Why, you ask? The recent years have been seeing a dip in mintage, igniting the potential for these coins to shine in value. The anticipation is so intense as Schectman estimates that 2023 might witness a mintage as low as 7 or 8 million coins, or perhaps even fewer. If you want to stay ahead of the game and make smart investment decisions, you definitely don't want to miss out on what he has to say. In this video, we'll unveil the secrets behind his revised silver price predictions that have sent shockwaves through the investment community. So let's jump right in. In the world of precious metals, silver has been a topic of keen interest, especially in recent times. According to Andy Schectman, there has never been a better time to consider investing in silver eagles since 2019 than now. Over the past few weeks, we've witnessed a noteworthy rise in silver eagle premiums. What's driving the sudden surge? One key factor is the scarcity of silver eagles, stemming from a restricted supply and heightened demand. The US Mint, responsible for producing these coins, has experienced challenges in meeting the growing demand. Scarcity has propelled silver eagle premiums to new heights, sparking curiosity and opportunity among investors and collectors alike. The mintage of silver eagles is a crucial aspect to consider. Different years have yielded varying levels of mintage, with some years having been notably rarer than others. For instance, the 1995 and 2011 silver eagle coins are among the scarcest, with just 30,125 and 99,882 coins minted, respectively. In contrast, 2015 saw a record-breaking mintage of 47 million bullion silver eagles. This fluctuation in mintage directly affects the coin's potential for appreciation and value over time. So why is now such a prime moment to consider investing in silver eagles? Andy Schectman points out that the recent years have seen remarkably low mintage levels, setting the stage for potential appreciation in the future. In 2023, Schectman estimates that vintage could be as low as 7 or 8 million coins, or perhaps even less. The scarcity, coupled with a strong history of demand for silver bullion, has positioned silver eagles as an attractive opportunity for investors looking to diversify their portfolios. In 2022, the US Mint sold 16 million American Eagle silver coins, making a 43.5% decrease from the previous year. Despite this decline in sales, it's essential to note that the drop wasn't attributed to a lack of investor interest. In fact, global demand for silver bullion remained robust, evident from the record-high premiums observed for American Eagle coins. With a recent uptick in silver eagle prices after a period of decline, Andy Schectman's advice to consider investing now gains even more relevance. When looking into the intricacies of the silver eagle market, it's important to understand the pivotal role played by primary distributors. These distributors act as intermediaries between the US Mint and the broader market of silver enthusiasts, investors, and collectors. However, the silver eagle market isn't without its complexities. Primary distributors receive allocations that are not boundless, which leads to a finely tuned interplay between supply and demand. The limited allocation of these coins has tangible consequences on the market dynamics. As demand escalates and surpasses the allocated supply, it creates an environment where silver eagles become scarcer commodities. The scarcity in turn drives up premiums, making these coins more desirable and potentially more valuable in the eyes of collectors and investors. This leads us to the notion of supply-demand equilibrium. The delicate balance between how much silver eagles are demanded and how many are available can significantly influence market premiums. The restricted allocations received by primary distributors become a crucial lever in this equilibrium. When allocations fall short of the demand, it catalyzes an environment where premiums rise due to the rarity of the coins. Furthermore, Andy Schectman provides intriguing insights into the changing dynamics of the global currency landscape. He touches upon the fascinating concept of a potential gold-backed BRICS trade currency, a notion that has been circulating for quite some time. Schectman points out that the notion isn't merely theoretical. It holds the potential to challenge the dominance of the US dollar as the world's primary reserve currency. The concept of a gold-backed BRICS currency might seem far-fetched, but as we've seen with the changing tides in the financial world, One of the key implications of a gold-backed BRICS currency would be the emergence of a coalition of nations aiming to diversify away from the US dollar's stronghold. If these nations were to rally around a currency backed by gold, it could challenge the dollar's supremacy and reshape the balance of global financial power. Speaking of changing dynamics, let's talk about Saudi Arabia's strategic alignments and the potential impact on the US dollar's global status. Historically, the petrodollar system has bolstered the dollar's position with oil transactions largely denominated in US dollars. However, as Saudi Arabia explores alternative alliances and partnerships, it raises questions about the longevity of this arrangement. Schectman's observations point to the fact that such shifts could lead to a recalibration of global financial dynamics. Schectman's insights provide a glimpse into the profound impact of agreements between significant players like Russia and China. These agreements, often operating beneath the surface of conventional narratives, hold immense potential to shape the demand for the US dollar. Collaborative efforts across military and economic domains could gradually erode the dollar's dominance, leading to a decrease in its demand for international transactions. Over the past 2 decades, the proportion of US dollars held in global central bank reserves has diminished, declining from around 70% 20 years ago to under 60% at present, and this decline continues steadily. Both the European and Chinese authorities are actively working on establishing international payment systems that operate independently of the dominant SWIFT system, which is currently dollar-centric. Saudi Arabia has also toyed with the idea of valuing its oil exports in yuan currency. Meanwhile, India is opting to transact the majority of its oil imports from Russia using currencies other than the dollar. The diminishing demand for the US dollar, as shown by Schectman's analysis, raises pivotal questions about the dollar's future as the world's premier reserve currency. The dollar's status is deeply intertwined with its safe haven allure and its role in international trade. However, as more nations explore alternatives and seek to mitigate their reliance on the dollar, its role might undergo a transformation. This shift could send ripples throughout the global financial framework, prompting discussions about the emergence of alternative currencies or collaborative endeavors that might reshape the global economic order. The concept commodity-backed currencies is gaining momentum as a potential challenge to the long-standing dominance of the US dollar. As Andy Schectman discusses, the idea of currencies backed by tangible assets like gold, silver, or other commodities could introduce a new level of stability and trust in the global financial system. Growing interest in commodity-backed currencies is not only driven by the desire for a more secure monetary foundation, but also by the aspiration to create an alternative to the dollar's hegemony in international trade and finance. Jim Rickards, an influential economist and financial expert, adds another layer to this narrative. He suggests that the BRICS nations comprising Brazil, Russia, India, China, and South Africa could play a pivotal role in challenging the existing financial order. Moreover, the idea of combining powerful organizations like the Shanghai Cooperation Organization and the Eurasian Economic Union is gaining traction. This amalgamation of influence and resources could create a substantial coalition of nations working together to reshape the global financial landscape and reduce their dependence on the US dollar. Andy Schectman also sheds light on the multifaceted nature of silver, emphasizing its significance as both a store of wealth and a means of protection. Silver has long held a special place in the history of wealth preservation. Unlike traditional investments, such as stocks or bonds, silver's worth isn't confirmed or confined to the fluctuations of the market. It's a tangible asset that transcends time, making it a store of value that has been trusted for centuries. Silver's dual role as both a currency and commodity gives it a unique versatility. In times of economic uncertainty or currency devaluation, silver has historically maintained its value, acting as a hedge against inflation and financial instability. When it comes to buying silver, it's important to differentiate between purchasing it for profit and buying it for protection. Buying silver with the intention of profiting from price fluctuations in the market can yield substantial gains, especially during periods of heightened demand. However, this approach is often tied to market timing and requires a certain level of speculation. It's about preserving your purchasing power in the face of economic instability, geopolitical turmoil, or even currency devaluation. If you enjoyed the video, guys, make sure to subscribe to the channel, like the video, and watch this one as well.